It's 8 o'clock, so let's silence our cell phones and buckle in for another exciting EDA meeting here.
Way to tee it up.
I don't know. All right, so we'll call to order. I'd be looking for approval of the March 20th agenda.
I would move approval with the addition of the item for support for the Big Lake wastewater treatment plant for the city of Big Lake.
Thank you, Madam Commissioner.
I'll second.
4 seconds. Well, now we got a roll call.
Gotta do a roll call, yeah.
Aye.
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 Andrew?
Andrew?
Aye.
All right. And I'd also be looking for a motion to approve the February 20 county EDA minutes.
I'll make a motion, we approve February 20th minutes.
All right, Laura's in. Do we have a second?
I'll second. Molly, I'll second.
Okay.
Aye.
Aye.
Aye. Aye.
Aye. Aye.
All right. We do have one addition, as Madam Commissioner did state. The city of Big Lake is looking for our support for funding for their wastewater treatment plant. I don't know if there's really anything we need to discuss here. Marie, did you have anything to speak on this, or?
No, if there's questions, I can assist otherwise. Key infrastructure that we need, most people are aware and are likely in a similar boat as us. But
What's the time frame on it?
so this request, or this letter will be used with some of the federal funding. So that request will be submitted within the next, I think it's week now, but it would be for 2026 appropriations.
Okay.
I'll move the letter of support.
Second.
All right, all in favor?
Aye.
Aye. Laura?
Aye. Aye.
Andrew?
Aye.
All right, motion carries. All right, on to item 4. Now we get to go on autopilot. Looks like Brian has to work here for the next hour.
No, it's gonna be very interactive. There's no option here.
Careful what you ask for, Brian.
Yeah, that's very true.
All right, well, we'll just move into 4, the Housing Trust Fund discussion. Brian?
All right, thank you. So this is a continuation of our conversations about, now that we have the Housing Trust Fund established, what programs to actually administer through it, and having a discussion about what are our options. Let's see if our clicker is good to go. Wonderful. There we go. Rolling right along. There we go. So the main part is really looking at what Minnesota Housing already offers with their fix-up programs. So that's kind of a bulk of the research we've been doing the last few weeks, working really closely with Andy to really understand that program. We've also had a lot of conversations with the Center of Energy and Environment, and they do a lot of fix-up program loans. So we'll be diving into that. Looking at what Elk River already provides with their rehabilitation loan program. Kind of taking a look at, we did some more research on that cellar rehab side of the house. So what our recommendations are there, and then actually introducing a new program for us in this conversation that looks very promising. So the Minnesota Housing Fix-Up Program is actually a very robust program, and from all indications, it works fairly well, and they have funding for it for as many applicants that they've had, so it's not a program that runs out every year. It does break down into the secured loan column and the unsecured loan column. Really, the only difference is the amounts, and obviously it being secured or unsecured, but this fix-up program does hit a lot of our residents in the county because they offer really flexible application requirements. So like the minimum credit score is only 620 for the unsecured, 680 for for the secured, sorry, and 680 for unsecured. And you have flexible loan term limits, all the way from 1 year, all the way up to 20 years. And a big part of this too is that qualifying income. So if a household wants to apply for this fix-up rehabilitation loan program, which the bottom there shows the vast array of projects you can do under this program, only one of the spouses needs to make less than $185,000. So as long as there's one spouse, one homeowner, I should say, of that pairing that makes less than that, that's the qualifying income.
185,000.
185,000. One of them,
Not combined.
not combined. Yeah, it's a really interesting definition for qualifying income. Yeah, yeah, excludes most of our county. Yeah. So another flexibility here is that it can actually be a DIY project. They do have some specifications there, but it really is flexible on whether it has to be a contractor project or the homeowner can do the project themselves. Interest rates vary depending on the length of the loan, so the lowest being 7.125% to 8.25% on the secured side. We'll talk a little bit more about that interest rate in a future slide. But, and again, it covers 100% of that project cost up to $75,000. So it is actually a very flexible program that we were kind of surprised by just like how much can actually fit underneath this umbrella. There is, we'll get into that, okay? So, from that fix-up fund, if we focus on that interest rate, one thing that Minnesota Housing offers is a community fix-up program. And so what that allows is for communities to buy down that interest rate. And the right-hand side shows some communities that are already doing that: Brooklyn Center, Minneapolis, Richford. And what you do is work with a third party, so a lot of people work with CEE, that Center of Energy and Environment, to actually work with them and buy down that interest rate for people in that city that are going through the fix-up program. This is a really interesting thing. The only downside is that the way that that program is structured, it really is you give that money to buy down that interest and you don't recoup those funds. It's kind of a one-way street on that one. So it's not a grant, but it's not anything that we would get back. So the communities invest in this, help their residents out, but it does just a one-way street there for our funding. And then we looked into what other cities are doing, and we're brings us to what Elk River is doing currently with the rehabilitation loan. So I asked Josh to maybe speak on this just a little bit to see what this program is.
Sure. I do have a handout too if you want something to look at.
Pass that.
So yeah, our HRA leverages, at least we earmark $150,000 annually for this program. We use Center for Energy and Environment for origination and servicing. We offer $5,000 to $35,000 loans. We recently increased the loan amount from $25,000 to $35,000. I think that was a good move. 2/3 of our loans since we made that change have been over $25,000. We offer 4% interest rate. We've had that for quite some time now. Payback terms of up to 15 years. That's depending on loan amount, so the higher loan amount, you can extend that payback term. Eligible properties, 1 to 4 unit owner-occupied properties within the city's urban services district. Our thought is to aim at the older housing stock in Elk River. And to that point, we require the property to be at least 20 years old. Most interior and exterior projects are eligible. You can see the list there. I don't need to go through them, but quite broad. And then in terms of marketing, you know, we've done a handful of pieces in the Star News. They have a spring and a fall home improvement section, so we usually try to get an ad in there. We do a handful of things on Facebook. And then the past couple of years, we've partnered with ERMU, our utility, to get a a flyer sent out with their bill, and that was pretty successful. A couple years ago, we got a handful of inquiries right from that mailer. You know, speaking to CEE, what's nice, if we have applicants go to them, apply for our loan, and they're ineligible, they refer out to the Minnesota Housing Fix-Up Fund. CEE has their own funds to leverage, as well as there's a CenterPoint on-bill loan. So it's nice that, you know, our residents could still have access to some other funds, even if they're applying for our specific one. So CEE has been really great to work with, and we anticipate to keep using them for a while here.
How many loans are active?
We probably have 10 to 12 right now. Yeah.
On average, how many do you get a year?
It was slow right when we first started, but then we kind of boosted our marketing. So we had, in 2023, I believe we had 4. We had 2 last year. So we would like to see more. We haven't hit that 150,000 cap that we've kind of set. So we hope to. I mean, we have those funds available, so we'd like to see it utilized more and more. So we want to be a little bit more strategic on marketing this year, try to do something with the RMU again. But yeah, we get a handful of inquiries. Sometimes we get residents that are outside of our urban service district, but our board wants to keep it within that boundary right now.
It seems to be the struggle with some of these programs. I know the city of Big Lake did one some years back. It was just getting people to want to take on that, even that debt at those, you know, attractive rates and stuff.
Yeah.
But just to take on that debt was challenging, I guess.
And it sounds like a big distinguisher from this and the Fix-Up Fund is that you guys allow for townhome condominiums and properties held in a trust.
Yep.
It looks like the Fix-Up Fund, you have to be the homeowner in the home, and it really starts to exclude if you start looking at like a triplex or a multiplex of any kind, or even trust. They don't really like to do trust through the Fix-Up Fund. So it sounds like that's one area that you guys really expand that out for your residents.
Sure.
Yeah.
Is your program exclusive, or can it be piggybacked on another program? Do you guys care?
That's a good question. Do you know offhand?
From our vantage point, I would say we're more in we will let it be stacked with others. I'm not
But
sure
you
that
guys are
others
securing
do.
a mortgage, so you guys are okay taking 3rd, 4th, 5th position?
I don't know if we go 4th or 5th, but I mean, getting beyond the 2nd is acceptable.
And from our research, that's the only city in our county that kind of has any additional program like this going on currently. Kind of going back to what Minnesota Housing offers, the other range of projects fall under the Energy Conservation Loan Program. So anything that improves energy efficiency is a separate loan program that our residents can apply for. This one is up to $60,000. There is no income limit, so in case you're worried, but it just needs to be energy-related projects. And this one does need to be work done by a contractor, so you do have to have that contractor bid in there. And then, so that's really the offerings that Minnesota Housing has. Before we get into our programs, one of the key takeaways we kind of found through the research is the Minnesota Housing fix-up programs, including the energy conservation loans, are such good programs. It's incumbent on me and this position to really get that out there and make sure that our residents, to Josh's point about marketing, getting that information out there better, I think will be a good holistic picture of what we're working on here. So getting into our perspective programs. So last month, at the very end, we brought up the idea of a seller rehabilitation loan proposal. And that was to help incentivize our sellers to move forward with selling their properties and help them to do some of the projects that would make them qualify for FHA or VA loans. In doing a deep dive into this, we found a few problems with that proposal, namely that really the fix-up fund could already do that for homeowners because you do have as short of as a year And especially if they project out and know that these projects are coming up. We also started looking into actually penciling this out, and because those loans would be such short time periods, the amount of funds we'd have to send to a third-party servicing agency to kind of get this all going would probably outweigh any sort of interest we'd be able to get in that time period. And then the whole topic of balloon payments really gets very complicated very quickly, and is not recommended kind of in the general discourse right now too. So in general, we would advocate for kind of moving away from that idea. It was really good to be able to explore that a little bit more, but just with the short time periods of that proposal, it looks like it doesn't really pencil as well as we were hoping to.
Question, when you're talking about marketing, and it sounds like Elk River is trying to be that marketer, is there any reach out to like your construction companies, your realtors, to let them know that these programs are available? Because a lot of times when someone goes puts their house up for sale, a realtor is probably going to suggest there's some things that you could do. And then contractors, of course, have an opportunity to share some things that homeowners can possibly take advantage of. Just curious if that would be of assistance in the marketing plan.
Yeah, I don't think we do that en masse. I think anecdotally with the individuals we talk to, we try to share. I know we share it with our building department, so people come in, requesting permits for projects that we have this resource to share too. But I think looking further into sharing with.
So usually by the time they're there to get the permit, they obviously probably have figured out a way to fund it.
Sure.
So,
I mean, if it's another project outside of what they're currently working on.
just curious, I thought that would be an avenue to help share.
From a general marketing side for us, a lot of the financial institutions throughout the county, as well as other real estate brokers, are very interested to get any information to be able to share it out. So I'm excited for that next wave to do a lot of continued outreach through the financial institutions and then the real estate agents too, so.
Well, it's something that might be interesting this year because I don't know how many of you have received notifications from your insurance companies, but insurance is changing how they pay for roofs just because of the storm damage in our area. And so whether it be the roofing companies, the contractors, or the insurance agents, those roofs will not be covered, or storm damage will not be covered in the same way that it has been in the past. So, certainly that might be a consideration going forward. Maybe it hasn't been in the past, but maybe going forward.
And that's probably a good segue to move into our next slide. So we really work closely again with Andy and CEE. Actually, we had a four-way conversation for a while, and then it just dropped down to us and Andy, looking at where could we be advantageous to our homeowners in a way that Minnesota Housing doesn't have any program. And instead of looking at the seller side, looking at when there's a new homeowner and they're purchasing their home and they have very little equity in the home, but they have all these projects that they're now inheriting, and they have very little cash on hand to do anything about it. This would be a loan program that's based off of special assessments. So it would be totally run in-house, and we can provide a max amount for that project. And instead of administering through a third party, we would just run it as a special assessment on their tax statements. So and they would pay it off just like their regular taxes as time goes on. And then if they do sell their house before they're all paid off, as a special assessment, they would either need to come current with that or negotiate with the buyer in some fashion for the buyer to take that on.
So that goes to your point about a lien position. This is attached to the house, not the person. So you kind of take that out of the equation, then a lot less risk.
And you'd roll that with the new buyer, it would have to be paid off at sale.
Would have to be paid off at sale in some way. So either the seller doing it.
No, it could go on.
Oh, it can go
Sticks
on.
to the
Okay,
house.
I'm sorry.
So it
but
could
typically
be
it'd be a
assumable.
negotiation.
Yeah.
So it could be
It could be
assumable.
assumable, yeah.
And Jillian, I don't know if you want to talk about our septic program. It's very similar to how they run that. So we do have a kind of a structure of how it could work already.
Yeah, no problem. There's a lot of you I haven't met, so my name is Jillian Carlson, and I work down in planning and zoning. One of the financial assistance programs that we have is a low-interest loan for septic replacement or repair, and it's pretty much the same as this. The cost to replace the system is assessed as a lien against your property, and you pay that back with your property taxes. However, you currently pay back your property taxes, be it twice a year or out of escrow, which means a smaller portion of it would just be tacked onto your monthly mortgage payment. And that is sitting at a 2% interest rate, and the auditor's treasurer's department runs that as a special assessment about a year after you sign that paperwork, and it goes through the recorder's office. Typically, we tell people that when you have a lien, you can't sell until you pay that off at point of sale. So because it is with the house, it's not with the property owner, but we've always just told people that that has to be paid off before they sell the house. But
And we could do that, but we also have the flexibility.
yeah,
that-
you could also
yes,
do
that's a
it the other
parameter we'd
way
have to
too.
discuss on how you want to handle that, but usually it'd be a negotiation point where they would take it out at the sale price and pay it off, but it doesn't have to be done that way.
So if it can be rolled with the property, it's much more agreeable.
And this way too, the very last point is that doing it this way really cuts down on the risk for us, so the risk of non-payment, because really one way or another, we'll be getting the payment back as that special assessment, so.
So Brian, what gap is this filling that isn't in the Minnesota programs?
So specifically for that, you'd be looking at, going back to the secured versus unsecured. So from my understanding, to get that secured loan side, you do have to have some equity in the house, kind of off the bat there. So we'd be looking at, this would help with, sorry, right, it's a little sleep here. There was a reason why new homeowners had a hard time signing up for this program, and I'm trying to remember where that was at.
Typically, we'd offer at 2% or 4%, somewhere in that range. It's a lot cheaper, but like Brian said, a new homeowner, if they're just getting started, they have very little cash on hand. So this would actually give them a year to pay it back, because the special assessment doesn't get added on to the next year. So they would get some cash up front with a low interest rate, which is a little more beneficial to a new homeowner than what the program is right now with the state.
Yeah.
And similar to that program, the types of projects that we could allow for eligible projects could be all the energy efficiency upgrades, and then projects that are important to the house for safety soundness. So kind of defining that, but looking at any failing systems, similar to the septic, as far as failing systems go, anything that can improve safety and soundness. And so there's room to figure out what would fit into that.
And roofing could be on.
And roofing, yeah.
Probably not.
I'm just.
Oh, okay.
Just went over here.
So I guess I'm a little confused on this. Are we saying this program would apply to homeowners where we are doing a special assessment on a home for some reason, and this is a way to pay back that special assessment? Or are we saying they can apply for this program to do something to the home, and then we do a special assessment on the home because they're doing something special to the home? Which way is this working?
Your
Number
ladder.
two.
Number two.
Yeah.
Okay.
And then for points to kind of continue this conversation with, this is just one of, we're still trying to think of and think through different programs. So this is kind of like a 1A program. If we keep thinking through the different programs that we can use through the Housing Trust Fund. And I think maybe a point of further conversation is exactly to your point, Ken, on how this is different for the new home buyer, how this is exactly different from them going through the fix-up fund. I think that's an important point of clarification. But as we talked about before, this is one program that are recommending to kind of keep moving forward with as far as moving forward with, but also the other part of this would be to continue to do that outreach on getting the word out there about the Minnesota housing program.
One other point is, since it's a special assessment and we have less risk, really the only qualifications are that it's a homesteaded property and that you have a credit score above 600. Those would be the two things we'd have to verify because it's attached to the home, not the person. We have a lot lower risk of not getting that money back.
So if it's assessed to the taxes and it can continue with a new homeowner, how long do they have?
That's what we could talk about. Yeah. What do we want to have for an interest rate? How long do we have it? What's the max that we'd be willing? Those are kind of the decisions we have to make if we go this route.
Is that something you wanted to dive into today, or come back around to, where are you at in your process?
We have time. If this is something you want to move forward with, we could put something together and have it ready next month for review. Then it could go to the board. We'd have to have a public hearing at the board level, but
I
you're
would
the
say,
chair.
would maybe it be like based on the amount of the loan, you would facilitate a payback. I mean, you're not gonna go 10,000 and let them have 15 years to pay that back.
Do you know, Jillian, how yours, well, it's only a $5,000, or do you have a larger?
No, so, first of all, it covers 100% of anything up to $20,000, 95% of anything exceeding $20,000. If you take out a loan less than $5,000, that's paid back over 5 years. Anything exceeding $5,000 is paid back over 10 years. But we are changing that. We're in the process of doing proposed ordinance amendments to extend that so that anything exceeding $25,000 would be paid out over 15 years, just to be a little bit more friendly to those people who are submitting invoices for like over $30,000. But that's kind of how people are paying it back right now, but we're looking at changing it to that going forward.
One,
Their taxes?
Yeah. Yep, or if they're paying their property taxes out of escrow, then a smaller portion is just tacked onto their monthly mortgage payment instead of that twice-a-year payment.
Okay.
Andrew, are you trying to chime in?
yeah, I was just thinking, one thing I like about the septic program is the county has a vested interest in those septics, getting updated, to prevent, groundwater contamination, et cetera, right? So if we're gonna go with something along this, this special assessment program, I think I like the structure. What I would like to, for the team to research a little bit is what types of projects would we want to have this program go toward, with the idea being what's driving the county's interests. And here's what I'm thinking of, right? And I don't know if this is the case or not, but the county has a vested interest in bringing housing up to code and being able, and sometime down the road, that house being able to be sold under a variety of loan programs, whether it's VA, VHA, et cetera, right? I'm not sure, for example, that there's a big big county interest in vested interest in, if they want to put in a pool, something like that. So what I'm thinking is that we should probably think about, based on our housing study, what are we trying to accomplish, and is there a way to direct these loans to go toward projects that help us with our goals from our housing study? Does that make sense?
Absolutely.
Yeah. And like Elk River, we could put an age requirement that the home has to be 20 years old, 25 years old, things like that to really give it to the homes that need the upgrades.
I think from the housing study, 40% of our housing stock is older than 1970s. So we do have a good chunk of housing stock that is older than the 70s there.
I do like the idea also that, that perhaps this is, qualifies for houses that are in a trust or townhomes or those sort of things. So I think we should take a look at that as well. Just, most financial advisors are telling people nowadays to put their homes in a trust. I don't know how many people actually do it, but that's something to think about. And then the same thing with townhomes. I think we want to encourage townhomes and multiplexes as well. So I think it'd be valuable to have this go toward that as well.
So when we're talking about are we more likely talking HOAs? I mean, we've got quite a few HOAs. I didn't know if they would, because they have to take out loans in the name of the HOA. Just curious.
Yeah, that's a good question. Does your program do anything with HOAs?
We have never crossed that bridge. Presumably we wouldn't, or it would be a special consideration of our board.
That's something, yeah.
Well, I'm just curious, because someone who lives in an HOA development cannot do something to their property outside. I think you might be able to do things inside, but outside, if you needed to enhance the look of the aged property, you can't do it on your own.
Something we can look up to see if, from the special assessment side, if that would make sense.
I think we have to be a little careful with that. I understand where Rhiannon's going with this. I think I'm kind of assuming that Elk River's program is more aimed at attached duplexes, like twin homes and that sort of thing, because it's hard to replace the roof on half a building, right? As an example. So, and if you've got a fourplex where you've got, if they're all attached, if you do something to that building, you need to do it to the whole building, not just one unit. As far as HOAs go, I think those can get a little sticky. If it's a condominium and it's run by an HOA, then I think that's that's probably one thing. If it's just an HOA over a bunch of, in a neighborhood, I think that's something else. So we may I think the devil's in the details on that one. We'll have to, I think we'll need some research on how we'd want to handle that.
And I wasn't thinking the latter of what you were talking about. I was thinking the ones that are in HOAs that are attached, or they got a cluster of attached.
Yeah, I guess I would just want to be careful how we write this so that neighborhood HOAs couldn't take advantage of it. You know what I mean?
Yeah. I was thinking that.
He's really connecting. Let's see the smoke.
Yep, so what we can do is come back next month with more nuanced details about it, and then answer the question on how this is still different than the fix-up. And I think one of the main advantages will be that lower interest being run in-house, but answer that question and then dive into what it can actually start to look like and present that to the board for next month's meeting.
Well, I think Andrew's point has to be addressed. What is what's the county's advantage here? Do we care if a new homeowner replaces the carpet? Is that something we should even get into? I'm trying to keep this to the point where we're just not trying to create ways just to shovel money out the door. Okay, so.
We can make it have a safety component.
Well,
right on, the deck's falling apart, even a roof could be a safety.
Right, so a couple things, health and safety, we can work with plan and zoning, obviously, so that could be a big, we can get by with that, or if they can prove, as Commissioner Danielowski stated, an increase in property value. That one's gonna be a little bit tougher because it's probably gonna require square footage. You know, your typical maintenance items, things like that, aren't gonna move the needle. But those would be two areas where I think the county would have a vested interest, and could be thresholds of approval.
Yeah, I still would like to see you guys go back to the housing study and think through, okay, how can we know the two areas where we have the largest needs in the county moving forward. How could this program help accomplish the goals of increasing, you know, one or both of those available housings, right? Whether it's workforce housing or whether it's retirement housing. So, and it may take some, and it may not be readily apparent, but I would encourage you to think through how could we shape this program so that it accomplishes the goals of because to me, the point of having the housing trust fund is to address the issues that were established with the housing study. If those two aren't connected, then we're not doing our job. So one has to lead to the other.
So you're thinking more along the lines of an earlier statement you made that these funds could be or maybe should be driven towards houses that do not qualify for certain financing, and that could be a qualifier, so a little bit different. So this one was if somebody just bought a new home, you know, was your vision. But back to somebody that's looking to sell a home, but they don't qualify for financing, which is, you know, gonna be your older stock, which you're referring to. Is that something you would think would meet your criteria, Andrew?
I think that's one example. But that was just off the top of my head. I just want to make sure, to your point, I don't want to have a program to figure out how to shovel money out, right? We did a housing study. We know that we have a shortage in certain areas of housing moving forward. If we're going to establish this program should, at least at some level, try to help accomplish the goals that are set forth from the housing study. And maybe that's one way it happens, but I don't want to dictate that because maybe there's better ideas on the ways to make that happen that we just haven't necessarily thought through yet. I just want to make sure that it's taken into consideration. That's my point.
And Andrew, to your point of talking about trying to assist people to be able to age in place as well, taking the opportunity, because there's things that have to happen to a home to make that opportunity happen by reinforcing different things that are in the walls, different things that ADA compliant upgrades. So I don't want to exclude that, and I don't want to exclude a new homeowner purchasing something. If we go back a slide to what you said, you had a list of, you know, what could happen. You could purchase something that needs new windows. And I would not want to exclude the opportunity for a new homeowner to be able to replace their windows.
That could be a possibility. Ann, what you just said though, so let's think about it for just a second. The housing study said we're short on senior housing, right? And a lot of seniors aren't moving out of their existing homes and downsizing, but maybe and this is purely an example off the top of my head, so it's not fully cooked, but here, I'm just using this as an example. Maybe one thing this loan could do is if a homeowner is downsizing to a smaller home, but they need to set it up for to be able to age in that downsized home, right? So they need wheelchair ramps, or they need ADA compliance, or they need to redo the bathroom to make it more senior friendly, something along those lines. Maybe that's a component that this could also go toward. And so that helps that new homeowner downsize to the smaller home, but this smaller home needs some updates to make it senior friendly. Does that make sense?
Yep.
There again, doesn't DHS have programs for this already?
I would need to do more research on that side. I imagine there's some programs, but I don't know them off the top of my head.
And that was just an example, by the way. I'm not saying that's the specific program, but what that does is what we said needs to happen is we want people to be able to downsize, to move out of their larger homes. So that opens up that stock for the first time homeowners to then move into the homes that is left by the seniors moving that are downsizing. And then that opens up the new, workforce housing, because then that family's moving up, right? So it opens up that whole flow. And if this helps facilitate that, then I think that helps meet our housing goal accomplishment or goals.
And definitely before our next meeting, we can look up what programs on the age in place and the accessibility piece, what programs already exist, and then start comparing on that side of the house too.
Do cities know anything of age in place programs?
No,
And,
not as direct as that.
and normally with HHS, a lot of their programs are geared towards income-based and on the lower income side.
Can I add one thing? One thing we gotta be mindful of is if we did a program like this and it was something in the townships, if you do a program and it requires like a septic compliance, that could be something that could add a extra cost to them. Or if it's roofing or siding or replacing windows, those are just over-the-counter permits. They don't require septic compliances, so then that's something we gotta keep in mind. So I wanna do a deck, okay, well, your septic's over 10 years old or whatever, you gotta do a compliance, well, then it fails, and you gotta whole other kind of works. Something to keep in mind. Yes, we have that too.
And one thing, I'm channeling Andy Baller here. I think what he would say is that one of the big stumbling blocks that we do have that we're not gonna be able to get around is the differential in interest rates, where so many people are locked into a 4% or less interest rate, and, to relocate, go buy that home now is gonna be 6-7%, and people aren't willing to take that hit. I've spent more hours than I'll admit thinking about that. It's just out of our hands, so.
But we could help them stay in a home then.
But does that help to Andy's point, I'm still, working on Andrew here. Does that tie back to our housing study?
If it requires windows and stuff, I think it helps with the energy.
But does it help with the housing study to free up housing? So I'm still on Andrew's point.
I can see the argument that if you improve aging in place, then people are gonna age in place and really stay there longer. So to your point.
But it's an opportunity, if that were to be their thought process, that they're aging in place in something that is safer for them to do that. And also an interest rate that would be favorable as versus going out to, I don't know what interest rates are at the bank for home improvement, but they're normally not too, they're 6 and above, I'm pretty sure.
Yeah. Well, I like the overall framework of the program. I like the ability to put it onto a tax assessment. The simpler we can make it, the better. Another plus here is if this is on your tax assessment, this isn't gonna affect other financing down the road. So if they do need a home improvement loan or something like that, this isn't going to be on there, which would allow them to do other projects, bigger projects, without that coming up on the credit. So I think it definitely has a lot of merit here.
And I'm not sure from a bank's perspective, where is their break on, I mean, what'd you say, 680, 640?
620 was the
620?
secured.
Okay, I don't know what a bank looks at these days, I haven't gotten a loan like that for a while. Where they exclude anybody based on a credit score.
So what do you need from us, Brian? What kind of guy, what are you looking for? Do you wanna put together a framework of this?
Yeah, if I were to summarize some of the main points coming out, it sounds like by next meeting, for Commissioner Hall's point, connecting this back to our housing study, taking a deep dive and seeing where can this align with the housing study and make sense. And then looking at, does DHS or does any other program offer any sort of aging in place, make sure we run that research as well. And then start looking at the details within our departments of how this program would be run. And kind of bring that all back as probably another presentation here, but to start getting into the nuances of chewing through this program.
Do you guys facilitate these loans right through planning and zoning, or do you have a third party that?
No, it's just me.
And she's volunteered to help us out, so.
That volunteered or volunteered?
A little bit of both.
You're not doing
It's a
much.
negotiation.
Just while you're figuring out the details, I was just gonna add one thing. If you were talking about bringing things up to code or safety, talking about houses that were built, pre-1970, maybe look at things like asbestos or lead paint, things like that. Maybe this could be used to improve those types of things.
Well, that radon factor too.
Exactly.
We're a huge
Yeah.
radon
Yeah.
risk county.
I
There's a
imagine,
lot of housing that does not have radon,
Mm-hmm.
the abatement,
Mitigation.
systems, mitigation systems.
Until they get inspection.
Yeah,
and
they're not cheap.
I'll check on the public health side because they might have some data here too. It would be interesting, I think, again, to Commissioner Hulse's point, our housing study didn't focus so much on the safety of the houses that we currently have. So we'll continue to work to tie those two together to make sure that it makes sense, because we want our residents in safe homes and have the housing study tie in. So getting those two to match up.
Well, and one thing that, I mean, when you're talking about aging in place and older aging adults staying in their homes, you're talking about physical safety. But one of the factors that hasn't been, I mean, and this is maybe subjective, but one of the main reasons for people needing to move from their independent housing is not physical, it's memory issues. And so if these investments in the home are made at a time where they age in place for a certain amount of time while they're, let's just say, adult children are able to help with these improvements, and then something happens, maybe it's a memory care issue, or maybe it is death, that home then is able to turn at a higher rate. Like once the the senior moves on or to maybe memory care or what have you, then that home is ready to be put on the market versus, oh gosh, now we've got memory care and we're paying for memory care, but this house needs these improvements. So the timeliness of when these improvements are happening, maybe it's aging in place and maybe it's just prior to moving on to that because one issue or another forces that home to be ready to turn. So, making the house safe at a time where everybody's got the time, the ability, the finances to be able to do that. And then when that homeowner moves on, then that house is quicker to turn. So you don't have someone not living in the house and then the issue of not having the funds to be able to. So, because that's a whole different issue, so.
And I think quickly on that point, that might help connect us back to the housing study because we have the continuum of senior housing. And maybe, I'm not sure if the housing study really dove into it, but Maybe we have people that are moving from independent living to assisted living because their house is not compliant for them. It's no longer working for them. So if they can make their house work for them, we don't need that movement. They can stay in place, and that does actually help the housing picture because we don't need new houses that.
And that's even if they were downsizing, that house they're downsizing into could use those things. So I think anytime we help assist with our housing stock in the county and keeping it viable is a good investment, and we get that return back even on doing it the property tax way. I love that because we are really secured then.
I see ADUs as a option to use that towards.
The thought.
Yeah, I don't know why not.
I just saw it on the bottom as part of all that.
Oh, yeah.
That helps out.
Okay, any other discussion, anywhere we can move? I mean, we do have time, so I'm not cutting this short, but if we've got things off the table and corrected for you, we can definitely move on. All right, looks like we're moving on. Business retention, expansion, insights.
This one should be a quicker presentation for us here, but really wanted to make sure to come back to the board. Since my time starting here, we're going about 7 months, and I'd like to give probably at least quarterly updates to you, if not a little bit more frequent even than that, on meeting with the businesses and what we're getting out of those visits. So this dives into really what the stated goals were, what businesses we visited. I tried to narrow it down to just the top 5 kind of insights we've received out of that, and then what our future goals are. So going back to our strategic plan, really having that collaborative approach with cities and townships. I put the city logos on for the cities that we've done a good job with coordinating. So like with Josh and Brent, I know Josh and I have been on a few business visits together, and the aftercare or meeting up with those businesses afterwards has been a combined effort between myself and the city level. I do put there that my goal for the next 6 months here is to continuing to do those collaborations more with Zimmerman, Baldwin, Clear Lake, and the townships. So that's an area for me to continue to improve on for our collaborations there. So looking at, kind of made a giant list of just the businesses. So obviously there's other businesses that I've visited over the last 6 or 7 months, but these ones actually trigger that business retention and expansion. And the way we look at that is having the time to actually sit down with either the business owner or someone high up in the C-suite or HR to be able to talk through the range of different topics that we have on our BR&E questionnaire that we developed back when Jessica was here. So broke it down into industry type. This is not based on codes, but just general industry types. You can see really try to hit manufacturing and childcare. And then the rest are me working through the chambers of commerces, finding businesses that would like me to come in and do these visits, working with the cities on visits they already have scheduled. You'll see, we'll get to it in the goals side, but the goal for the next 6 months will be to start visiting our larger employers more. So these are a lot of our smaller employers, but they are still significant. And our next page actually breaks this down into a map of the county. So using the submarkets from the housing study, these are the number of visits completed in the last 6 months, so kind of a representation of that. And going to kind of what's been learned through that, so we do put all that information into the software program that we have, the Executive Pulse, and we can create a report of a lot of this information, which I'll actually talk about Executive Pulse a little bit later too. But top one, all of our employers are, not all, majority of our employers are actively hiring and are looking increasingly toward a younger workforce and just training them on, because there is that need to just have a body there that they can be trainable and train them through. And we see that a lot in the manufacturing positions and the childcare positions especially. And childcare being mostly the childcare centers, though some interactions with family childcare, same thing, they're willing to train. So this is important because it makes sense for my position and us to be looking at our technical colleges and working closely with our high schools, because that is our next workforce, and making sure that they have those apprenticeship programs and everything else that will help get people into these positions. I'd say on the second part, so our very small businesses that have 0 to 5 employees, there is a strong entrepreneurial spirit in Sherburne County. That's why the ILT entrepreneurship program is going so well right now. And some other entrepreneurship side things we get a fair amount through our business lab, the business consultants that we have through Rural Ideas Network. Those are mostly our smaller 0 to 5 employee companies, but there is still that gap that exists to grow them from just a side business to something that's actually generating enough revenue to start being able to hire on employees and maintain that. So we do have that gap that exists to get them over that threshold and get them into something that's generating enough profit to be able to do that, or revenue. On the whole, the third note is that on the whole, people are pretty positive about doing business in Sherburne County. They are happy with the support they've received from the cities that we've been in, and support from the townships too, actually. And we've gotten a fair bit of feedback from the townships being flexible to meet with businesses to work on zoning updates and everything else like that. So on the whole, we get a positive review. And on the broadband side, we've gotten a few people, especially out in the townships, that are like, hey, broadband's not an issue right now. And it's nice that it's a non-issue anymore due to all the work that's been done in the past few years on the broadband side. And then that goes into, so at the end of the BRNE visits, we kind of ask, what can Sherburne County do for you? What would you like to continue conversations around? And inevitably, business grants or opportunities that they don't have to put money out to receive something back really come up a lot. And they say, oh, do you know of any grants that are targeting this, that, or the other? And so continuing to have those conversations about where, if grants exist, where they exist, and where to filter them off to. Oftentimes that leads into conversations with connecting them with DELA, with Minnesota DEED, for the workforce training side. So the training grants that exist through DEED right now. And then finally, we do have the business labs, so the business consultants that we're doing through Rural Ideas Network. Not a lot of our companies that at least I've visited, even the smaller companies, are actually utilizing that as a resource. And I really tried to say it really is for companies of any size, but we see a lot of benefit with our business consultants with the smaller companies. But we get very little people from my visits then signing up and doing a business consulting. So there's a disconnect there where as soon as a business actually goes through one business consulting, we do often see them repeat and at least do a second one. But I'd like to see that become a little bit more, which does take us into kind of some future goals for it. So the last 6 months have been a lot of employers that are smaller employers, 50 employees or less throughout the county. A lot of that has just been, those are companies that I've been interacting with getting to know the chambers. But now looking toward who are our bigger employers in the county, what are the issues that they're facing, where can they have some help? And actually, we have Crystal Cabinets set up for next week, so that's one of our bigger employers here. I'd like to continue to collaborate more with cities and townships that I haven't been able to quite yet, and looking at Executive Pulse. So the CRM platform that we have is really robust and it can grow and expand. And we're in talks, and it's in my other updates, but we're in talks with more partners to see where can we collaborate through Executive Pulse to make this information serve our region a little bit better. So I'd like to continue.
What's Executive Pulse?
Yes. So I should have put a nice slide there. Executive Pulse is the program that I input all of our business retention and expansion information into.
Okay, is that what Jessica brought on? Yep.
Yeah, yeah, it's continuation from Jessica. And it might be worth bringing back up to the board for that point, just to kind of see what we can do with that program.
I was just gonna say, Brian, I appreciated hearing you're gonna go see, Crystal Cabinets, cause I didn't see Princeton, there's a portion of Princeton that we have quite a bit of business in, that is in our county. And I think that gets lost sometimes because it looks like it's, Mille Lacs County. Same thing I was gonna mention in regards to what we have up by St. Cloud. We have a lot of businesses up there that I don't know if we've ever knocked on their doors when they're actually in our county and they're not in Stearns. So there's a lot up there on Highway 10 that live in with us.
It absolutely is. And on the Southeast St. Cloud side, I will say, they weren't actual business visits, but about a month or two ago, I did go door knocking through Haven Township. And so really, especially the companies on Highway 10, give them a little flyer about who I am and kind of trying to set up those. So I'd like to circle back with some of those on Southeast St. Cloud.
Yeah, that are in the city on their services, but they're actually in our county.
Yeah, yeah.
'Cause I
Oh, that's
think-
true. Yeah, and there's, that's actually one of the ones that, there's well, it's not a grocery store yet, but there's a convenience store in Southeast St. Cloud on the Sherburne County side, River Station. And we worked with them a few months ago to have them apply for a grant to expand out to a grocery store. So yeah, the Southeast St. Cloud market is important too.
And then Big Lake Township, you've been in some of their, because they have a small industrial park that actually is in the township, not in the city. You've been able to hit them.
I'm trying to think that going back to our list here. There's some of these that I think are right on that line. But I want to say yes.
Yeah, you're at Paragon.
Yeah, Paragon. That was one of them.
Well, Paragon is actually a joint city and township. I'm talking the little industrial park that sits out off of 172nd South where AccuCraft is. I think there's a couple other businesses over there.
Could dive into that more.
Yeah.
Yeah. And then kind of looking at that business lab consultation, so seeing if we can get more people to work with the business consultants that we're, right now it is a pay per use thing, but we want to make sure we're getting the value out of having that partnership. So seeing where that might be of benefit, or if we need to tweak anything from that based on interactions. And again, just goal is to give more frequent updates to the board about meeting with the businesses, because I view that as a big part of this position. So making sure that we're reporting back to you guys about how things are going. Got two hands.
Oh, sorry, you
Go
go.
ahead.
Okay. I just wondered, have you ever done any online surveys through the county newsletter with like a QR code to a survey or anything? Kind of targeted at small businesses, just answer a couple questions or see if they're interested at all?
Yeah, haven't yet. That's a good area to dive into a bit. We've done other surveys, but not through.
The county newsletter?
Yeah, the county newsletter.
Okay, so every once in a while, we need to have a gut check moment. This BRNE obviously takes a substantial amount of your time in coordination with cities and stuff. From your perspective and yours alone, Brian, is there benefit from these visits to the amount of time put in? Or who's getting what out of the investment we're making with your time?
I would say that the investment is well worth it, because some of these businesses are looking to expand in the next 6 months to a year, and I wouldn't have that information without some of these visits. And even some of the smaller ones, like there's a counseling center in Elk River that's looking to do an expansion, and they might utilize our revolving loan fund or apply for it. And so some of those conversations only seem to come out during these times that I meet with them. And there's been enough of that's happened that to me it feels beneficial to be able continue doing, investing that time.
And you three over here, you all do BRDs also?
We do.
And what's your input as far as your time invested? Do you look forward because the return is so substantial, or do you like, well, we should take that off our plate?
I'd like to give a thoughtful response, because I've had a lot of opinions about the pros and cons of BRE over time. I think it's very important to have a presence out in the community. How you do that, I think, is a little more subjective, and how you go about doing that and getting that. But I do feel there are times where, if businesses just feel they're unseen in the corner, that's not a good thing. But something that we've thought about internally a lot, we've had some metrics in past budget goals was, hey, we're gonna do X number of visits per year, and we've been trying to redefine a little bit what those mean. What they meant when I started was a 90-minute visit, where you would be very deliberate about things you wanted to talk about and questions you wanted to ask. And we've pivoted to more of a, maybe more contacts, but less intense. Again, kind of we're making the contacts, but it's less important to have that 90-minute conversation if we even have a 10 or 12-minute conversation because we ran into somebody at a chamber event. We can get a lot out of those 10 or 12 minutes that accomplish a lot of our goals.
A lot of times, some of these business aren't chamber members. I think we have to be recognizing that not everybody joins a chamber. Plus, it's an opportunity, in my experience, I view them as highly valuable with staff time, because you get in front of these businesses and you're not just, they don't think of you just as, oh, you're the people I get my property tax statement and taxes through. You can actually share information. Some people might not understand. They could expand because here's a great program they had no clue about. So I think they're great opportunities to invest and give back and have a great conversation.
Yeah.
I think that's the end of that presentation.
Yeah. If I could ask a question or comment, I've heard nothing good about the business lab from anyone that's gone through it.
Really?
True. The one comment I'll make, though, is I don't know enough about it to be a good messenger of it myself. And I would be curious, I don't know if other cities would be, just to learn more, know more, get a little more one-on-one information on that, so that if we happen to be out in the community and have an opportunity to pitch that program, that we have an opportunity to do that.
Typically, we get feedback after each session
Yeah.
from the user, and we haven't seen anything negative, so let's talk offline of where you're getting that feedback.
And just to be clear, I've only heard positive?
Oh, only heard positive.
Yes,
thought you
I want to be clear, okay.
All right, I feel much
Okay,
better.
good.
It is negative.
It must have been the wording I used. Everybody heard it. No, nothing but positive.
Oh, okay.
Sorry, everybody, yes.
So he wants to know more.
I've only heard negative things.
I know, right?
You know, I'm not surprised.
Nothing but positive I've heard as well.
But you're absolutely right. More
Just crushed his spirit.
but that's such a great point.
That was the most confusing conversation I
I was like, geez, what did he hear?
That was a really
I'm
good
glad I caught it.
game. Shots fired.
Okay, O'Brien, bring us up to speed on the EDA. I think we're on to number 6, right, Ram?
Yes, we are.
Yep, sounds good. So just looking at the highlights for some updates here, which I can kind of, but, so again, the BRNE visits like we talked about, we are still in talks with a few different companies that are looking at some of our communities for some bigger plans, and so those are continued conversations, and unfortunately that's kind of a general way of saying that, but on the business side, that is all tracking well, so, but diving into the next bulleted point on our housing subcategory, we did submit our proposal for the Minnesota Housing Matching Funds for the Housing Trust Fund. So we are requesting a match of $150,000 because it matches our local revenue section of our Housing Trust Fund. So that's what we're able to ask for as far as matching goes. They did confirm our submission, and they are not really giving set timeframes for when we'll hear back, but I imagine probably a few months here. And if we are awarded those matching funds, they do have slightly different parameters than our Housing Trust Fund parameters, just that they go off of state median income instead of our local area income, and that's pretty much the only difference there, so it's just something for us to keep in mind. But as soon as we hear back from them, one way or the other, we'll be reporting that out to the board. So it was great to be able to have our housing ordinance established well in time to be able to apply for that, because I think that's been a driver for a while. Yes, oh, okay. I look like Dan.
Anything else?
Yep, and then two last things here. Looking at the federal EDD, so the Economic Development District, the 7W region, continuing to have talks on that. And one new area that we're looking at is that Executive Pulse program that we use for the BRNE, looking at whether we'd want to expand that out to a 7W region kind of account, a shared account, where then we can pull more regional data from some of these business visits. So kind of in talks with the city of St. Cloud, in talks with Wright County Economic Partnership, and seeing if, from a regional approach, if there would be any benefit to having regional data from some of these business visits. So that's pretty early conversations, but that would help us in this Region 7W approach. And the last thing is we are participants with the North Star Corridor Community Meeting, so updates from the North Star folks there, and very much future is looking interesting for North Star, depending on what our state legislature does with the bill that's being, I think it's in a committee right now still. It hasn't been voted on, but there is a bill to just completely end North Star as we know it and switch over to buses or other types of transportation. So we are watching that closely.
Just to be clear too, those buses would not come into Sherburne County. They would end at Anoka. So that we need to be aware of, and I think we need to make sure we get our voices at the table. And then it sounds like they're possibly talking about maybe Amtrak would run, but it would only be it would start in St. Cloud and run down, of course, to the metro with no stops along the way. So they are technically, at the moment, the way it looks, cutting Sherburne County out of any of this opportunity for transportation. So just to be clear.
Can I just ask, I was pretty knowledgeable about North Star when it first started because my father-in-law was the BNSF coordinator when they first started. Has ridership returned?
It hasn't returned to number one, they have not put all of the runs back in that it used to have.
The number of times throughout the day?
Yes,
Okay.
that is still at a reduced level. Of course, the ridership has been gauging upwards, but not to the level.
Certainly, because not the number of people are working
yes,
downtown as they once were.
And it wasn't really meeting the levels prior to COVID. But as we all know, there was investment along this corridor, and investment made by the cities as well along this corridor. And there is no discussion with them as to how nobody's looking at that. They just want to turn it off and be done with it, which is frustrating, not for that aspect, but frustrating that they're not involving the people they involved when they were doing it.
It's all about.
Yes.
But wasn't this proposed by some representative like in the southeast metro or
Something
something?
like that, yeah, yeah,
Yeah, confused by that.
yeah. So, but that's what I've heard, that Anoka would be where the buses would end.
Yeah, that's correct.
So, just like I said, I don't know, have they reached out to you guys, Elk River?
We've not been involved, our city administrator is more attuned to it than I am, so I don't know if he's paying more attention or if he's having more conversations, I don't know.
Okay.
Anything else, Brian?
That's it.
All right, couple of quick things. How's the ordinance review doing over in planning?
So we sent the request for proposal up to the attorney's office. We got edited notes yesterday, so we'll get those updated and we are going to send it out hopefully in the next week. So got about 10 consultants we're gonna send it to.
With the addition of the consultants, the time frame for your completion, are you guys still shooting for the end of the year?
I mean, realistically, it'd probably be within a year from the date we get it. I mean, we're still shooting, we know that that's a target date. But, I think once we get the actual agreement back, we can get a better date when it will be done.
Okay. And then, one other thing kinda has to do with planning, but, I think there's a bill going through St. Paul which would be limiting cities and townships with some of their planning decisions. Have you guys, anybody here?
Yeah, the chamber actually has it on their priority list to vote against it.
Yeah, to push back.
Yeah, to push back.
You don't wanna take away local control.
So some of the chambers are taking the lead on that.
So, all you, important people around here in favor of, or are not in favor of that bill?
Take away local control, one size does not fit all.
All right.
I had a couple of questions.
Of course you could.
I know. I did also, I sit on a subcommittee with, NACO, which is the National Association of Counties, and it's, Economic and Workforce Development Committee, and I have been forwarding to Dan and Brian, the stuff that we get to look at, and, I know Brian responded back to me on the last one I forwarded that, a lot of what we are seeing is trending nationally, so, a lot of us are in the same boat. And he was going to share some of these things at different meetings and stuff as he found it would be applicable. Also, just was curious, Dan, where are we at on the conversation with becoming, what is it, the three counties?
Yeah, we have bylaws, we have an application ready to submit, but the federal EDA is kind of on pause right now as they go through the
Okay.
administration changes at the federal level, so we're waiting to hear back from the feds of when we can submit that application.
Okay,
3 of the 4 counties were interested, we did have 1 county that did not participate.
and we have decided to go
Yes.
without them. Good, glad to hear that. Because that would be very helpful. I'm not sure if, can you expand a little more on what we were just,
Oh, the Federal Economic Development Authority has a program where we can apply for additional federal grants. Or we have a SEDS plan, which is Certified Economic Development Strategy that's been submitted. But if we are actually a federal EDD designated region, we can apply for additional funds. So that's what we're working towards. Now, obviously, we have a couple of huge bridge projects in St. Cloud and Big Lake or Becker. But those are the programs we're really focused on, is getting infrastructure dollars for some of those larger projects.
and I think what, we're the only one in the state that doesn't have a,
And the Metro, because they have a different.
well, they have Met Council, which we don't want.
Which county is not interested?
Right.
Quick update too on accessory dwelling units. It'll be presented to Planning Commission for public hearing tonight.
You gonna show up?
Maybe. What time do they kick that off?
6. Be a few items on, it'll be last.
Of course.
Do you want to be added to the email list for the? Add them to the email list.
All right, well, if there's nothing else, I'd be looking for that final motion.
Make a motion to adjourn.
I'll second.
All in favor? We have roll call, let's do.
Aye.
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 Meeting adjourned. Great meeting. Thanks, everybody.